The King of Nasdaq ETFs has flipped. The best performing monthly dividend ETF that is based off the Nasdaq 100 just changed. I've seen a massive shift in the market over the last few months, and while I've been tracking it in my recent videos, today we need to talk about how this shift of the tides impact your favorite no NAV erosion funds. We're going to unmask the new top performer and see if the old king has officially been dethroned, or are you holding this in your own portfolio? Hey guys, welcome back to the channel. I'm Doug the Retirement Guy, and that's right. We've been watching this for some time. We've kind of kept it on the low quiet, but realistically, we wanted to find out, is this one really going to do everything that it says it's going to do? And that the proof is in the pudding. So we're going to dig deep into the new NASDAQ 100 funds and show you who we believe is now the new king of the market. Now, before we dig any deeper, we have to do the disclaimer, and that is past performances do not guarantee future results. This information is provided for educational and informational purposes. If you need financial advice, always contact a professional. So to understand why the leadership has changed is we have to look at the market sentiment and the fear and greed index. We have to look at the investor sentiment. Using the fear and greed index, we can see an official dip into the fear zone at 42. Okay, just a week ago, we were at 48. This is why we're seeing so many different market collapses, headlines lately, but remember, the settlement tool is just a crystal ball. It shows us the investors are feeling the heat from political climates to global escalations. In the environment, different strategies work different ways. So this is just an indicator that we use to see where the market is heading, which direction. Like I put on here, a month ago, we were in the neutral zone. Last week, we were into neutral. On the last close, we were actually dropped down to 47 for a fear. Okay, so we're falling just below that neutral market area that we're falling into the fear zone. So we're afraid of what's gonna take place with the markets. Now we turn around, we see that the tariffs have all changed again. What's that going to do to the marketplace? So everyone starts getting on the fear basis. This is why all different ETF funds use different strategies and use different pieces to move forward. So let's announce the contenders, the 5 high yield options that are out there. The current king is QQQI from NEOS, the NASDAQ 100 High Income ETF. The strategy is they buy right with a focus on tax efficiency and no NAV erosion. Now they're sitting with about $8.9 billion of assets under management, yielding about 14.21%. We all love those big yields. Now the next challenger that we have coming into play is TDAQ, and that's from Tap Alpha. Now this is a 0 DTE option overlay of the NASDAQ 100 exposure. Now, you got to remember, TDAQ is new with assets of only $121 million, and they estimate their yield to be 17.32%. Now, everyone else has a full year under their belt. TDAQ does not. Now, our big growth contender, GPIQ, the Goldman Sachs Tech, this is a dynamic covered call, 25% to 75%. To capture more upside potential. Now this one has $3.01 billion under assets with a yield of 10.09%. Now we can always turn to our safe haven of JEPQ, the JP Morgan Nasdaq equity. This is a defensive call writing on the Nasdaq 100 names. $33 billion on their net assets, a yielding of 10.56%. And then our weekly pair from Roundhill, QDTE. Now this is an aggressive 0 DTE overlay for high yield with heavy NAV risk. Now this one has $870 million under assets with a huge yield of 47.13%. So out of the 5 contenders that we have in the play, you can literally see how these things stack up, how strong that each one can be a player in a portfolio. But we can only have one king. And with QQQI putting out 8.94 billion with 14.21% yield, and a challenger of TDAQ with a yield of 17.32%, you can see why the market seems to have a change. Now let's start breaking down the data, the price return, the hardcore raw numbers. Starting with the pure price return, the results are surprising. QQQI, which many of us love, is down 3.5% over the last year. Meanwhile, GPIQ is actually up 2.41%. JEPQ, that stays relatively flat, is at negative 0.6. Now, a quick caveat, TDAQ hasn't been trading for a full year yet. So that 0.45 isn't a direct comparison. We'll look at the fair time slice at a moment, but already we can see a 4% performance swing between these funds. So this is why we start to see QQQI starting to lose its crown, because it's not holding its price market. Now, the big numbers that I always follow on this channel is total return, and this is the huge shift. So when we see the flip to the total return, which is price plus dividends, the entire leadership shifts. QPIQ is now our best performer at 13.74%. Interesting, the QDTE jumps into the second place spot because of that massive yield, and it compensates for the NAV drop off. This is the shift I'm talking about. GPIQ has navigated the recent tech sell-off with rocky patches better than the frontrunner QQQI. And the real question that we're going to ask is why? But when we take a serious look at all of the contenders that are in the marketplace, 13.74 from GPIQ is outrunning each and every one of them. While the next apple for apple, QQQI, is at 11.34 and JEPI at JEPQ at 11.1%. Now let's look at the rocky road period. Since September, when TDAQ was launched, the market has trended sideways. In a specific environment, the zero DTE, or that zero-day option strategy of that TDAQ and QDTE, have actually outperformed. It turns out when the market doesn't know where it's going, these daily or weekly income funds thrive. It's a high-stress strategy for the managers, but for now, it's working. Look at the overall chart, and you can see TDAQ is rocketing to the top, with QDTE managing huge volatility upsides. But GPIQ falls right in line, right below them, with JEPQ and QQQI trailing farther south. So now we're taking all the information of the contenders and pouring it all out together. What do you think? Well, I'll tell you this. QQQI is still in my corner because of that tax efficiency, that no NAV or real erosion coming out of it, that 14% yield, but netting me about 11.34%. I still think it's a strong part of my portfolio. GPIQ has definitely added to my mix. Because of the growth factor that it has, it doesn't have as high a yield, but it definitely gains in that yields, the growth side of it, is I'm strong with calling GPIQ a king. Now, TDAQ, because it's so new and it's still developing, but when you take a look at an 8% total return in the life expectancy that's been already, just a short period that's been alive, and a forecasted 17.32% yield, to me, this is that young challenger. This is where new money for me personally is going into. This is what I'm filling my portfolio with, is more TDAQ. because the bigger yield should generate some bigger total return. Now, again, remember, I'm not yield chasing. What I'm using is strategic, that even if I lose a little bit of growth, I still have over 17% from a yield. We take a look at QDTE, the weekly pair, yielding 47%. If I was chasing yield, I'd pour all my money into that fund. But when you take away and look at total return down to 12.5%, you can see while big yield can help control any NAV loss. This is why TDAQ has that availability room, but with the strategy that it's set up to be, I think this is the potential winner down the road. And of course, JEPQ, that safe haven, 10% yield with an 11% total return. I would shift some of my money from JEPQ to again, Goldman Sachs. So as you can see, across all the information we give you, the strategy, the diversification is key. So realistically, a lot of people are saying the Goldman Sachs, GPIQ is the new king. Are they going to be the permanent king? Maybe for now, but the market leadership rotates. In 3 months, 0DT option strategy may take over again. 3 months later, QQQI may be back on top. This is why I personally don't put all my eggs in the one basket. I like to hold a bit of each and allocate more to whichever one is dipping. Are you buying GPIQ in this rocky market, or are you sticking with the safety of JEPQ? I would love to know. Leave it in the comments below. Who do you think is the new king? And which ones are you buying? Which ones are you holding? Where do you see this market going? I'd love to hear your comments below. And especially if you like what we're doing here, don't be afraid. Hit that like button and don't be afraid to hit the subscribe. Thank you and welcome. And we'd love to hear back from you.
Thank you for watching. Press the like button, hit the subscribe button, and join. Leave any comments